Imagine you are one of the most respected men on Wall Street, former chairman of the NASDAQ stock exchange, trusted by banks, charities, celebrities, and pension funds around the world. Now imagine that every single dollar those people gave you, billions of dollars, was never invested. Not 1 cent. It was all a lie. This is the story of Bernie Madoff, the man who ran the largest Ponzi scheme in history. $65 billion, 17 years, and a secret so well hidden that even the government couldn't find it, until his own sons turned him in. Bernard Lawrence Madoff was born in 1938 in Queens, New York. His family was working class. His father had failed at running a sporting goods store. His mother briefly operated an unregistered brokerage firm, which was shut down by the SEC. Bernie watched all of this growing up, and he learned one thing early. The financial world rewards confidence above everything else. Not competence, not honesty, confidence. In 1960, at just 22 years old, Madoff founded Bernard L. Madoff Investment Securities with $5,000 he saved working as a lifeguard and sprinkler installer, and a $50,000 loan from his father-in-law. The firm started small, trading penny stocks. But Madoff had a gift, not for investing, but for technology and for relationships. He was among the first to use computers to automate trading, helping build what would eventually become the NASDAQ. By the 1980s, Madoff's firm was one of the largest market makers on Wall Street. He was connected, respected, celebrated, and completely trusted. But behind the legitimate brokerage, Madoff had quietly opened a second business, an investment advisory arm, where wealthy clients handed him their money to manage. And this is where the lie began, because Madoff never invested a single dollar of their money. Not in 1990, not in 1980. Investigators later concluded the fraud started almost from the very beginning, as early as the 1960s. Instead, he deposited client funds into a single bank account at Chase Manhattan. When investors wanted returns, he paid them with money from new investors. When investors wanted to withdraw, he paid them with money from other investors. It was the oldest fraud in the book, a Ponzi scheme, named after Charles Ponzi, an Italian immigrant who ran a similar operation in the 1920s. The math always works, until it doesn't. What made Madoff different from every other fraudster was his method of building trust. He didn't chase clients. He made them beg. Access to Madoff's fund was by invitation only. He cultivated an air of exclusivity so powerful that wealthy investors, doctors, lawyers, Hollywood celebrities, considered it a privilege to give him their money. His client list read like a who's who of the elite. Kevin Bacon, Kira Sedgwick, Steven Spielberg, the foundation of Holocaust survivor Elie Wiesel, universities, pension funds, charities that had spent decades building their endowments. And the returns he promised were not spectacular. That was the genius of it. While other funds promised 30 or 40% returns, raising obvious red flags, Madoff promised a steady 10 to 12% year after year, even when the market crashed, even when every other fund was bleeding. Madoff's clients kept receiving their statements showing consistent, reliable gains. It seemed almost too good to be true, because it was. An entire floor of Madoff's office building in Manhattan was dedicated to one thing: printing fake account statements, backdated trades, fabricated gains, thousands of documents that existed only to sustain the illusion. For years, one man tried to warn the world. Harry Markopoulos was a financial analyst who had been asked by his firm to reverse engineer Madoff's strategy. What he found shocked him. The numbers were mathematically impossible. No legitimate strategy could produce those returns with that consistency across all market conditions. Markopoulos concluded within minutes that Madoff was either front-running or running a Ponzi scheme. He submitted detailed complaints to the SEC in 2000, 2001, 2005, and 2007. Each time, the SEC investigated briefly and found nothing. The agency that was supposed to protect investors repeatedly failed to uncover one of the most obvious frauds in history. The SEC's failure was catastrophic. Later investigations revealed that the agency had received multiple credible tips over more than a decade and never once conducted a thorough examination of Madoff's actual trading records. Madoff, meanwhile, lived like a king. Multiple luxury homes in Manhattan, the Hamptons, Palm Beach, and the south of France. A private yacht named Bull. A private jet. Expensive artwork. A lifestyle funded entirely by stolen money. For decades, the machine kept running. New money came in. Old money went out. Fake statements were printed. The SEC looked the other way, and Bernie Madoff continued to be celebrated as one of the most brilliant minds in finance. Then came September 2008. The global financial crisis hit. Markets collapsed. Banks failed. And Madoff's investors, suddenly terrified, began requesting their money back in massive numbers. In the span of 3 months, investors pulled $7 billion from the fund, and Madoff had nothing. No investments, no assets, just a bank account running on empty. On December 9th, 2008, Bernie Madoff called his sons Mark and Andrew into his apartment. He told them the investment advisory business was a fraud, that it had always been a fraud, that he was finished. His sons did not protect him. The next morning, they called a lawyer, and the lawyer called the FBI. On December 11th, 2008, federal agents arrested Bernie Madoff at his Manhattan penthouse. He was 70 years old. He had been running the scheme for at least 17 years, and possibly his entire career. The total amount stolen, an estimated $65 billion. The damage was devastating. Thousands of victims lost everything. Retirees who had trusted Madoff with their life savings found their accounts wiped out overnight. Charities that had invested their entire endowments were forced to shut down. The foundation of Elie Wiesel, the Holocaust survivor and Nobel Peace Prize winner, lost $15 million. Wiesel called Madoff a thief, a scoundrel, and a criminal. He said it was a betrayal beyond imagination. Mark Madoff, Bernie's own son, never recovered from the shame. On December 11th, 2010, exactly 2 years after his father's arrest, Mark hanged himself in his New York apartment. He was 46 years old. His younger brother Andrew died of cancer 4 years later, publicly blaming the stress of the scandal for accelerating his illness. In March 2009, Bernie Madoff pleaded guilty to 11 federal felonies, including securities fraud, wire fraud, money laundering, and perjury. He showed no emotion in court. No tears, no visible remorse. In June 2009, he was sentenced to 150 years in federal prison, the maximum allowed. The judge said the sentence was meant to send a message. Bernie Madoff died in prison on April 14th, P1. He was 82 years old. As of 2024, court-appointed trustees have recovered over $14 billion and returned it to victims. But tens of billions remain gone forever, spent, hidden, or simply untraceable after decades of fabricated records. The most haunting question about the Madoff scandal is not how he did it. It's how nobody stopped him. The SEC had the evidence. The financial industry had the suspicions. And for decades, everyone looked the other way. Bernie Madoff didn't just steal money. He stole trust. He stole retirement. He stole decades of work from thousands of people who believed in him. And he did it with nothing more than a smile, a handshake, and a fake ledger. The ledger was always empty. And by the time anyone looked, it was too late. If this story made you think twice about who you trust with your money, subscribe to Shadow Ledger. Every week, we open a new ledger, and the numbers never lie.